In this video, I want to talk about relations. I want to go over some important notions to consider. I want to show you some examples of using related facts. I want to explain that sets of facts which go together for some purpose are called components. I want to explain some different types of relationships between characteristics, relations between concept characteristic, relations between numeric facts, and relations between components. So we'll get right into that now. So let's start by looking at some important notions that you need to consider when thinking about relations. So first off, facts are not random. They don't just exist randomly in space. They don't exist on their own. They're not free-floating. So there are different types of relations. I'll just leave it at that. Just keep in the back of your mind that there are different types of relations. There's not just one type of relation. So recognizing patterns in relations helps, particularly with trying to get a computer to help you do something. Computers need patterns. Computer programs can be written that help you do things. So basically, the point I'm trying to make here is that patterns help. So facts have patterns. Relationships themselves have patterns. I've identified some patterns. There could be other patterns. Hierarchies or trees are a good way of visualizing relations. So just keep this in the back of your mind. I'm just pointing these things out, nothing really profound here. Just keep these notions in the back of your mind as we think about relations. To get started, let's just look at an example of some related facts. So first off, again, remember that facts are related. They're not free-floating in space. So here we have some facts that might appear on an income statement. You've got revenues, cost of revenues, gross profit. Revenues, cost of revenues, and gross profit are related in that gross profit is equal to revenues minus cost of revenues. So also, all of the facts are related in that they all relate to the consolidated entity, as can be seen in the legal entity column in that table of facts. The first three facts are related in that they all have the same period. So if you look at the first three under the period column, you'll see they all relate to 2011, and the last three relate to 2010. Again, there's nothing profound here. I'm just showing what I mean by relations. The things that I point out, those are relations. Now, drilling deeper into the notion of relations, a set of facts which goes together for some purpose can be called a component. So facts and their characteristics can express a balance sheet, an income statement, maturities of long-term debt, significant accounting policies. You can read the rest. I dig deeper into the notion of a component in the video Understanding Components, but I just want to here provide an overview and note that facts and characteristics that go together for some specific purpose are called a component. And you see there a list of examples of what I mean by the term component. Explaining this another way, when you think about it, imagine a balance sheet and an income statement combined. So that makes really no sense. A balance sheet is information as of a point in time. An income statement is information that is over a period of time, and that's why a balance sheet and an income statement are separate, and that's what a component is, things that are broken up into separate pieces or components. It's really that straightforward. I mentioned and went into relations between characteristics when I explained characteristics. I'm going to do that again in the video Relations Between Characteristics. So I don't want to spend a lot of time, but again, I just want to point out that there are relations between characteristics, and you could have a partial set, a complete flat set, a complete hierarchical set, a complete complex set. Again, it's more important to focus on the big picture here as opposed to digging into these details about the different types of relations between characteristics. I'm going to talk about that in the subsequent video. The takeaway here is that there are relations between characteristics, and here you have the list of the types of relations. Next, I want to talk about the relations between a specific characteristic, which is the concept characteristic. I do want to drill down here a little bit more than I did in the other because I have not introduced this yet, so I will introduce it. So basically, there are relations between concepts. For example, a roll-up, you could have a fact A plus fact B plus any other number of facts equaling some total fact. That's what a roll-up is, a series of numbers that roll up into some total. A roll forward is different than a roll-up. A roll forward, you have a beginning balance, you add changes, and that equals some ending balance. Another way to view this is in accounting class, we learned about base. Beginning plus additions minus subtractions equals ending. Same thing. Another type of relation is an adjustment. An originally stated balance plus adjustments equals a restated balance. Another type of relation is a variance. An actual amount minus a budgeted amount equals a variance. You could have any number of complex computations. For example, net income divided by weighted average shares equals earnings per share. I see I have a typo there I have to fix. So I'm just grouping all of those complex computations into one pattern. And finally, if there are no numeric computations, you simply have a hierarchy. And that's basically, it's either numeric or non-numeric concepts that are not really related, other than they're just listed together. For example, financial highlights. You may have, assets, income, cash flow. They're not necessarily related, other than they're all listed together in the financial highlights. So those are the relations between concept characteristics. I will dig into these relations in far more detail in the video, relations between concepts. The final category of relations that I want to go over are the relations between components. So we talked about facts being organized together within a component. Here we talk about the components relative to other components. So I call this flow, and it's basically the order of components or the sequence of components. So for example, in a financial statement, you typically have the primary financial statements first. You might have the balance sheet, income statement, cash flow, statement of change in equity, or some people put the income statement first and then the balance sheet, cash flow statement, statement of change in equity. Then you might have significant accounting policies, financial statement account disclosures such as cash equivalents, receivables, etc. Broad transaction category disclosures such as subsequent events, related party transactions, etc. The point is, flow is the relationship between components. And there you have it. So in summary, we talked about some important notions that you need to consider when thinking about relations. I showed you some example relations. I explained that sets of facts which go together for some purpose are called components. I showed you relations between characteristics, relations between specifically the concept characteristic, and relations between components called flow.